Sage here for kalkinemedia. Please subscribe to the channel and press the bell icon to be notified of the latest videos. In today's trending topic, we're going to talk about how to pick good iron ore stocks. Lustrous and ductile metal, iron is one of the most common metals in the Earth's crust. It is a key building block of the global infrastructure, and as the metal is a key raw material required for the manufacturing of steel. And steel is an alloy used for the construction of buildings, pipelines, bridges, cars, ships, windmills, industrial equipment, as well as machinery, etc. And around 98% of the total iron ore mined every year is directed towards the production of steel, according to the US Geological Survey. Of the total, nearly half is used for construction work and more than 10% in the automotive industry. So who are the major producers and consumers of iron ore? Iron-rich stocks are found globally, but ore-grade commercial deposits are present in a few countries only. Australia, Brazil, China and India are among the leading iron ore producers in the world. And the production of iron ore is capital intensive, as a significant investment is needed in infrastructure such as transportation. And thus many of the world's largest mining companies produce this raw material. Also, a few integrated steel production companies are engaged in the iron ore mining and processing. And major players in the iron ore market are Brazil's Vale SA, BHP Group Limited, Rio Tinto Limited and Fortescue Metals Group Limited. And currently, China is the world's leading consumer of iron ore, accounting for nearly 57% of the global consumption, as per the Resources and Energy Quarterly, March 2021. And the Asian country increased its total iron ore imports by 6% to 444.89 megatons in the first 5 months of 2021. India accounts for 9% of the world's iron ore consumption, while the EU, Japan, Brazil and the rest of the world comprise 6%, 3% and 19% respectively. So how to invest in iron ore? There are 3 primary ways through which investors can park their funds in iron ore. And one of the methods is through making investments in an iron ore company which is engaged in the extraction of iron ore. Another option is to invest in iron ore buying the shares of an integrated steel company, which gives access to both iron ore and steel industries to the investor. And the third option is an exchange-traded fund, or ETF, which is focused on holding the stocks of the companies producing iron ore. However, there are not many ETFs that extensively focus on iron ore. So how to choose the best iron ore stocks? For getting good returns on iron ore investments, investors must do thorough research and analysis to monitor the viability of a stock. And here are a few factors that can be considered before making investment decisions. Reserves. The investors must look for the company's total iron ore reserves and its market value. Reserves are evaluated by feasibility studies, which are used to verify the worth of deposits. A feasibility study accounts for the estimated size and grade of a deposit by subtracting the costs of extraction. Production history and guidance. The investors must analyse the company's yearly production trend and its guidance for the future. If the production trend follows an uptick pattern with a guidance range higher than the previous year's production, it is a good sign for the investor. Portfolio. If an investor wants to invest only in iron ore, a proper analysis of a company's business portfolio becomes necessary. A lot of miners may have diverse portfolios, thus investors must look at the amount of money the company is investing in iron ore and how much earnings of the company are coming through the iron ore business. Strength. To monitor the strength of the company, a peer analysis is required. For monitoring a company's strength among its peers, a fair comparison of its competitors having similar market caps and size can be undertaken to check the business performance. Stability. If the investors don't want to lose their hard-earned money, considering the long-term stability of a company is mandatory. A company that is better positioned to weather economic downturns is a good bet for investors. And dividend. Dividend-paying companies are relatively more stable. However, sometimes high dividends mean that the company is not investing much in their business. A company can temporarily cut dividends due to economic downturns, but that doesn't mean that the business is in jeopardy. Rather, it may require more money to pay instant expenses. Who are the leading iron ore producers in Australia? A number of iron ore producers in Australia have their operations in Western Australia, which is the hub for iron ore mining. And some of the largest ASX-listed players in the iron ore industry, ranked on the basis of their market capitalisation, are as follows. BHP Group with $143.37 billion, one of the largest iron ore producers in the world. Fortescue Metals Group with $69.73 billion, the fourth largest producer of iron ore. And Rio Tinto with $46.32 billion. Rio has the world's largest integrated iron ore portfolio. And Mineral Resources with $9.13 billion, who has a world-class portfolio in the Pilbara and the Goldfields region of Western Australia. Thanks for joining us on The Report. If you like this information, please like, share and comment on the video below and subscribe to the YouTube channel. For more information and regular updates, head to the website kalkinemedia.com. And this is Sage for Kalkine Media.